Hi, Andrew Alston here from Liquid again. I've got a couple more questions I'd like to ask, but before I do, I want to confirm something with the board and have Afrinic's legal counsel please confirm something. These elections, plus this meeting, plus everything else, are being handled in terms of the bylaws that I'm holding in my hand. And hence, I would like the board to please confirm that these are indeed the current bylaws that are on file with the Mauritian Company Authority, and if not, why not?
First and foremost, until I see what's in your hand, I can't answer that question. I still can't answer that question. Andrew, as per Section 39 of the Mauritian Companies Act, we're not obliged to do so. And we have not done so.
Okay, at this point then, I first of all need to say that yes, Section 39 of the Mauritius Companies Act does indeed say that, but can you please confirm then that legally members have standing within Afrinic beyond the RSA as is stipulated by the bylaws, and can I also please propose a resolution to the floor that mandates the board to file those bylaws within the next 7 days for the sake of transparency, since this community has been led to believe that we are operating under bylaws that should have legal standing for the members, and as far as I can see, unless those bylaws are actually filed, this community has no legal standing since the directors are the only ones with legal standing. And this is what we've been led to believe for the last 2 years.
I will ask Adil to answer that.
Yes, thank you, Andrew, for that comment. I think the registration of the bylaw does not exonerate Afrinic to be liable to the bylaw, because the bylaw is what guides our proceedings. So register or not register, according to the legal and my understanding of the Companies Act in Mauritius, it still binds us. And we are not a public company, so that doesn't. Why we have not registered the bylaw? This is a decision that was taken by the board a while ago because of the specificity of the organization, and as it doesn't pose any additional legal risk to the organization, we prefer not to register it formally at the register of company. But nevertheless, it does bind Afrinic as an organization toward its member.
Can the board please tell us, was an earlier version filed?
No.
Okay, then I'm just trying to find the section here, but as per the proceedings in
Andrew, as you find that point, can you first tell us the end in mind so we can actually move quicker? What is the main point?
I would like a resolution from the floor as per powers of the members to ask the board to please file those bylaws.
Thank you very much, Mr. Alston. With the power to request that things should be done, It's also the need to realize that there are responsibilities. Sometimes discretion is better than absolute power to get things done because one has the power. The law is clear about how things should be. Afrinic is operating as a limited liability company within the law. Please realize that we're a member organization. We are not a limited liability company. We're an hybrid organization that has evolved over time and has been carefully stewarded. I want to please advise that whatever we are bringing up, because we are the majority here right now, does not mean on hindsight these were not discussed. So we do and have discussed this severally, and some positions had been taken. If we are reviewing it, I think it should be reviewed in the line in which major decisions are reviewed in most organizations, which means they are first proposed, they are then discussed, the impact is assessed, and then decisions are taken like responsible people. It should not just be a resolution that is sprung up and voted upon and action is taken without realizing the impact and ramifications. If there are risks to us having not done it, I think this annual general meeting should be informed first of the risk rather than being compelled to do it first. That's just my position.
I am quite happy with that position, and then all I would ask of the board is that the board produce a report for the floor that states exactly what the risks are and what the legal position is, and I would ask that the board prepare such a report within 30 days. And that I am quite happy with, but I would like the board to report on the legal risks of doing this and of filing that and make that come forward to the community.
I will ask legal counsel to respond.
Good afternoon once again. Now, regarding this issue of filing or not filing the bylaws, as all members know, our company hasn't filed the bylaws with the registrar, not because it is not following a provision of the law, because the law provides that you have the option not to do so. And the law goes even further. Section 39 says you don't even need a constitution. So if we have a constitution and either we haven't filed it or we do not have it, it is the full Companies Act which applies to the company. This is what I read. Where a company, Section 41, doesn't have a constitution, the rights, powers, duties, and obligations of the company, the board, each director, each shareholder of the company shall be those set out in the Act. So the mere fact that it is not filed doesn't mean that if during the course of the operations of the company within the premises of the bylaw there is something where somebody is prejudiced or somebody has a problem, it doesn't mean that person has no recourse. The recourse is you go to the Companies Act and everything is there, whether it is a derivative action, whether it is an action by a shareholder with prejudice, or whether you seek an inspection of your affairs by the registrar. All these options are open to any member of the company. Mind you, we are not a shareholding company where the risks are more important with people who put in their own money. So neither there is an obligation to have the constitution, nor do we have an obligation to file, but the obligation is we must always act within the province of the Companies Act. And one thing I would like to bring to the attention of members, if you go through the bylaws, the board on several occasions given instruction to try and tailor this bylaw so that it reflects our community as an internet community. This is why there are many provisions where we have derogated from the bylaw of the Companies Act, and we are allowed to do it. We have derogated so that we could map out a constitution which reflects what we do. We have put in the existence of the community, the RPD process, the NOMCOM, everything is there. So to summarize, having a constitution is not an obligation, filing it is not an obligation, but if ever there is any member, and when I speak of member, I equate it with a shareholder, though it's not the same thing, has all the avenues of redress under the Companies Act, from the smallest to the biggest. And even, if I may add, civil liabilities, criminal liabilities as well, under the Act.
Thank you, Ashok. Viv?
Thank you, Chair. I'd just like to make a comment here. We, while recognizing Andrew's concern for whether the members have legal standing, I think we have to recognize two things. The board is transitional, but AFRINIC as an institution is here to stay, and I think the members of this community has a duty to protect it. So I would strongly recommend that we don't take this kind of decision lightly based on a resolution at this meeting. And there are, I think, many factors to consider, and I would recommend that the proposal be noted, but that it is extensively examined both from the legal point of view, because we've heard legal counsel, and I think it is in the interest of AFRINIC also to have other legal opinions, because it can have very serious consequences on the organization. And I repeat, I think our primary duty is to protect AFRINIC, and AFRINIC is not a very big company. It's a $4 million company. You've seen the reserves. We don't want to just spend all that money in court and, you know, have no more organizations. So I think the priority is to protect the organization, not to undermine it, and let's not take decisions lightly in a meeting like that where we have about maybe 20 members at most present.
Thank you, Viv. And on that note, as chair, I will close that topic and we'll take it back to board. So we're closing the issue of filing, we're taking it back to board, and board will come back to the community. Andrew, if it's to do with that topic, no, we'll close that topic.
That's fine. Thank you, Mr. Chair, for entertaining that question. Back to the financials. In the financials, the first thing I see at the top of that financial report, and I just like an explanation as to the motivations behind this, was that clause, there is a unanimous resolution at the top of the financials that excludes disclosures under clause 221 of the Companies Act, including the interests of the company, changes of mandate, the interests of members, and while, believe me, I am making no accusations here, I would simply like to understand the motivation behind such a unanimous resolution as is in the audit report. Then, with regards to the other questions on the financials, in 2012, we see a deposit matured of 18,071,440 rupees. Can the board please explain what was done with this money, when that deposit matured, and where that money was moved to? We also notice that the bank interest decreased from 757,920 rupees to 73,149 rupees, while the cash position of the company didn't change terribly much. Can the board confirm that the financial interest could have been impacted potentially by that deposit that matured, or is there another explanation? Then we also see at the bottom of the report that there are other payables to the amount of 6,776,576 rupees. And according to the note, these have an average term of 6 months and a non-interest bearing. can the board please disclose what those other payables are and what falls under that section? Thank you.
Thank you, Andrew. I will ask Paulos to respond.
Maybe if I could ask, Andrew, you were speaking very quickly, maybe you can just go back to the microphone and we can take them one by one.
With pleasure. First question was on the exclusion of Clause 221 of the Companies Act signed by unanimous resolution of the board. And I was simply asking the motivation behind that, considering what is actually contained within Clause 221 that refers to interests, mandates, all sorts of things.
Andrew, your question is why is the resolution is unanimous?
No, my question is, what are the grounds for passing that resolution? What is the motivation behind the resolution itself?
The resolution is to approve the financial audit account.
That particular resolution at the top specifically says that the company does not have to report on specific sections of Clause 221 of the Companies Act. And I can actually read it to you if you give me half a second. Page 1.2, all members have agreed by way of unanimous resolution that the annual report need not comply with paragraphs A and D to I of section 221, subsection 1 of the Companies Act 2001. And that is signed by 2 directors, approved by the Board of Directors on June 1st, 2014.
Yes.
And so I'd like to understand the motivation behind the exclusion of the information in those clauses.
Andrew, do you want the report to comply with those sections of the Mauritian law? Is that your intention?
Yes, I would like that, but I'd also like to understand why. I mean, there's got to be, in my view, in any financial and in any community-driven organization, if a board passes a resolution to not disclose certain things, right? There can be many, many reasons for that.
Andrew, this is disclosure to the public, not disclosure to members.
Please understand.
Is there a problem that something will not be disclosed to the public but has been disclosed to members?
No.
Are you quarreling with that? We need to understand what problem we are fixing, please.
No, I'm facing the issue that this excludes it from the annual report. The annual report is submitted to members.
The financial report is presented to members. Nothing has been excluded from what comes to members. Are we missing something here, sir?
I'm finding the clauses that are relevant, and I will bring this up as soon as I have the Companies Act clauses that I am questioning. All I am asking is if you're telling me that it is to keep information from the public and not the members, I'm okay with that. All I'm asking for is to understand the motivation behind that particular resolution that has specific exclusions. And if need be, I will read the clauses that I have particular concern with.
Andrew, in the life of Afrinic, we have always used this resolution. And to go even further, this is not new. All the information that are related to this financial report and the audit report are provided in this document. And in fact, we have always published the full audit report of the organization, which is also included in the annual report that comprise all the activities. So there is no intent here to exclude anything from the financials, but the financials are produced and published as submitted by the external auditors.
And like I said, I have no issue with that. But what I've asked for is the board to confirm, because if you read section 221,
Andrew, let me confirm that every single piece of information has been presented. After confirming that, then maybe it will help us to understand what you think has not been presented, so that the community, so that the members understand, so we can move on with this, because this has been like this for the last 10 years. And if you believe there's something, let's share that and actually come out, because let's not go around the house. What is the end point? What are you trying to understand? And then we will fix that.
as I've said, Chair, it is not a case of anything that I feel that the board has intentionally omitted. It was simply to understand why a clause was inserted that could potentially limit the transparency of the company. I am not saying that has been done, but I question whether or not the trust of the community may not be damaged by the placement of such a resolution. And hence, all I am asking for was the motivation. I am not making any accusations, any insinuations. I am not implying that anything was omitted, nor do I believe that anything was omitted. I am simply trying to understand the logic behind that particular resolution.
I just want to reconfirm something as well. Afrinic is a company limited by guarantee. Afrinic is not an association. So when the auditor do the report, and in fact, this resolution is proposed exactly by the external auditor, which is something that auditor do just to protect the organization in case something is not. Now, the resolution that the members take to approve the number can go beyond this audit report. That is our responsibility toward the member. We can publish anything we want outside of this report. This report is not the only thing that Afrinic can publish and has been publishing on its activity. So this has been put in there as practice of the auditors when they produce their report, just for them to protect the company they are auditing. That's all.
Thank you. That's all I was asking. It was nothing more than a simple explanation as to why it was there that I was seeking. So my thanks for that explanation, Adil. Should we address the rest of the questions?
Are there any more questions on 5.1? Do you have another question?
Well, there were several questions that I raised, and Paulus asked me to raise them one by one.
Okay, proceed, please.
Okay, so the next question I had was specifically around the deposit of 18 million odd rupees that matured in 2012. And I'd just like to understand, how was that money reinvested, where did that money go to, and how was it used?
Okay, let me answer the question. I mean, I think you are talking about the cash investment of Afrinic, right?
Yeah, there is a line in there, and I can give you an exact page number and exactly what it says in a second.
Right now, Afrinic has adopted a very strict investment practice. while we finally have a full investment, I would say, guideline in place. So this money is put in a savings account until we really have an investment. So the saving accounts for us is a way of mitigating any risk related to that cash.
Okay, but can I ask where that is reflected in the financial report? Because all we see in the financial report is an 18 million figure in 2012 suddenly dropping to a dash in 2013.
As the audit committee, we did ask about this, and obviously when there is a query like this, we normally send it to staff because they are the ones who do the operations and keep the records. So it was mentioned to us that the 18 million was withdrawn in 2012 and utilized. I think it relates to your next question, if I recall it, why did the interest drop? And this is exactly why the interest dropped, because the money was moved away from a deposit account, a fixed deposit account, and that reduced the principal that was deposited and hence led to the drop into the in the interest in the accounts.
Okay, fair enough. Then the only other question that I still had here was about the 6,776,576 rupees that worth of payables that state they have an average term of 6 months and a non-interest bearing. And I'd just like to understand what that liability is on the company. Sure, I'll give you the page in a second. If you look on page 26 under note 8, it says...
I will ask Patrice to respond to that.
Okay.
Right, the 6776575 represent short-term creditors like taxes, medical, pension, NPS, all the security which get paid the following month. Right, included in there, the largest of the amount is the funds that AFRINIC holds on behalf of the fire project.
My thanks for those explanations. Thanks very much.
Thank you. Do we have any other issues? Because we'd like to move a resolution on this.
Mr. Chair, I'm Shion from Nigeria. I have a comment to make. I understand that this comments that Andrew has been making seem to be something that has been documented or prepared well. I would suggest that in future, such comments should be forwarded to board. They discuss it, they respond to him, and we don't use that to waste the time here, right? Unless if he has done that before and board did not respond. Thank you.
Okay, before Viv answers that, members, I'm going to bring an issue to the floor which is painful and sensitive, but we have to share it now, is that the question that Sean asked that made us seem that the answers were rehearsed bothers me, because the questions that Andrew is asking were questions which were discussed within the audit committee in a private room. So it is a problem, but I will not resolve that. That's the only answer I can ask, because those were highlighted. Maybe he has a very good team. Andrew, I am still talking. Please, you cannot get onto the mic until I give you permission to do that. I am the chair. Thank you. And there was somebody in front of you. So it could be a coincidence. That is why we had all the answers, because these are issues which are in our audit notes. Okay? So that is why. That's the answer to you. The coincidence means we worked. Yeah? Either that, the coincidence means that the audit committee had exactly the same attention and curiosity that Andrew has. Right? So that is the answer to your question. They were not rehearsed. We did not agree with Andrew, but somehow, some way, there is a bit of a coincidence. End of story. Viv?
Thank you, Chair. This is a personal suggestion, and it's a personal suggestion to the new board, and Andrew is part of that board. For the last 10 years, Afrinic has been presenting its accounts in a certain way. If you look at the auditor's report, the account that it presents is called the Statement of Comprehensive Income. And judging by the amount of comments and questions and doubts raised, and realizing that it's not a healthy situation for Afrinic to appear to be holding information from its community, I would suggest perhaps that we discuss the reporting format that the community would want, and perhaps we could change that from a statement of comprehensive income to a statement of profit and loss. And that might be more appropriate and perhaps would avoid those kind of doubts and questions. It's my suggestion.
I will need to take some advice, but we're a non-profit entity, but we might get clarification on that. Fiona?
Just to add on to what Viv has said, I second what he says, because a non-profit can also have a P&L statement, is that if the financials in future can be circulated early, then we have the discussion. I think that is what Sean was alluding to. He didn't mean that there was anything, I think he was misunderstood, if I'm not wrong. He was alluding to the need for the financials to be circulated in good time so that we can thrash out any queries. If we follow the bylaw and do it within 14 days, then we reduce the time we are taking to have to discuss on the floor. That is, I think, what Sean had in mind.
Okay. Before we proceed, let me read something out from the Act, Companies Act, okay? It's section 217, meaning of financial statements and group financial statements. In this act, the term financial statements in relation to a company and its balance sheet date means A, a balance sheet for the company as at the balance sheet date, and B, an income statement which shall, section 1, in the case of a company trading for profit, and B, a profit and loss statement for the company in relation to the accounting period ending at the balance sheet date, and point 2, in the case of a company not trading for profit, be an income and expenditure statement for the company in relation to the accounting period ending at the balance sheet date.
Chair, I'd just like to confirm, Afrinic can produce a profit and loss because it's registered as a company. What makes Afrinic a non-profit is that it pledges all its reserves back, all its surpluses back into reserves. It cannot be distributed as dividends. So it can produce, to answer your question, it can produce a profit and loss account.
I just want to come back to something that Seung also mentioned, and I think if we look at what has happened the past few weeks, what is the most poisoning is that the questions are not asked and direct to the right people to get the right answer. And what Seung has said is the report to be released in time, giving a channel for people to ask for questions officially and not rumorously to get the right answer from those who are running the operation so that we avoid a rumor, because that is a process thing that we will probably look at as board to improve the accountability, the transparency on things, because for sure we may not be able to anticipate all the questions that can be asked. Secondly, we are a company and we have some practice that we do, and we will do those practice until we are asked to change it, and the member have the right to ask us to do it differently. But until that is asked, until that is not acted on, I don't think there is any wrongdoing. Thank you.
I'd just like to respond, Chair, to what you said, because I felt there was an allegation in there. The questions,
Andrew.
I want to clarify to the floor where those questions came from. The questions were formulated after I got the financials, which were distributed by the board. Those financials were submitted both to members of my company, including our finance guys in Mauritius who operate on Mauritian, standard Mauritian accounts, including the CFO for Liquid Kenya. They were both in possession of them. There were substantive discussions. There were also further discussions with various members of this community. At that point, those questions were formulated. And I think that if your audit committee saw them and I saw them, to imply that I got the information from other sources implies that somehow my finance team is less capable than the audit team because you admit that they asked those same questions. So that is where my questions came from.
Thank you, Andrew. I think I'll refer to Fiona's statement that there must be a misunderstanding. I responded to Sean's question as he implied that the questions had been reasked. I did not insinuate at all. I would not like to continue this dialogue. I would like to move on. Unless the question is to do with the numbers in the finance. Okay.
I hope this last statement is not going to be in the minutes, because I never said the questions were rehearsed. My point is what I believe Fiona has repeated and the CEO as well responded to.
Thank you. I think let's put all of this down to a misunderstanding. Let's move on.
Thank you, Chair. I just want to say thanks, Adele, for clarifying the issue on the financials. I think part of the misunderstanding may really be as a result of the community feeling they're not getting information when they need to. That means your work gets more challenging as the community grows and becomes more dynamic. So you need to see how you can work with your team, the rest of the staff, with the support of the board to improve on that. Otherwise, we have understood the explanation, and I think we should be passing a motion to approve the financials.
Thank you, Fiona. Noted. On that note, I'd like to request a motion to approve the financials as presented. All those in favor, please show of hands, please. All those against, please show of hands, please. Okay, let it be noted that the motion was unanimous. Thank you. So not unanimous, there's no objection. Okay, we're now moving on to item 5.2, which was the appointment of an auditor. A resolution. The resolution was amended as per advice from the floor. Paulos, can we please have it on the screen? And Okay, members, the resolution is on the screen.
I second.
Thank you. Okay, can we please have a show of hands? Show of hands of those who are in support of the resolution as put on the screen, please. Show of hands in support. Thank you. Can I have a show of hands of those not in support? Thank you very much. The resolution is passed. Thank you. So the next item on the agenda is the Finance Committee presentation of the budget for 2014. Can we have the slide, please? Do we have a problem? Okay, as they prepare the slides, I'll just ease you through the financials. I mean, the budget, in terms of operating budget this year. I mean, our focus is really on what you saw this morning from the COO in terms of service and excellence. So a lot of the work that we're doing is really focusing on maintaining that. All faction activities for the year will be revolving about improving of services, and that which was reinforced in 2013. In terms of revenue, most of the revenue is really derived from membership fees, and most of the work, again, it's our major single source of revenue. We do not yet have a revision in fee structure, and we don't envision to have a revision in fee structure in the next 12 months. So in terms of our growth is going to be really based on our membership growth and how much outreach we can do on that one. We're also looking at how we can increase our resource allocations in terms of contributing to membership growth. I have not yet got to the numbers, so I'm still looking at the data. So really what we did a lot 2013, and we're going to continue doing that in 2014, is in terms of focusing on a number of areas, as we said, that actually sustain our membership and service. One of the things that was really giving us a problem, which was a result of our problems currently, was reclamations and non-payment of members. Some of that came from other new members who did not proceed through the process, and others came from members who went out of business and had got into payment problems and had been allowed to go beyond a period, which we have stopped doing. We're also working heavily to reduce the level at which members get onto the system, get resources and fail to pay. So there's a lot of work being done at the forefront of that. Are we ready with the slide yet? Okay. Okay, so we've gone through that point. Okay. Okay, so when we look at the next slide, which is in terms of where we expect to get our revenues for 2014, is in terms of the LIR members and the end site. Your existing column tells you the clients that we moved on who are already on with resources, and the new column shows you the anticipated growth. Okay. In terms of membership base is set to grow by 28%. That's our anticipation. And we expect to get 30 new members. If you look at our revenue, it includes sponsorship and grants. So we had a presentation earlier with the fire revenue. And also ATK, which has been included with respect to members in terms of training cost recovery. The board last year reviewed our training, and we looked at we're looking to introduce a process where we have cost recovery in most of our training, so that it's not always a one-way, and we're anticipating to have at least an 80,000 cost recovery basis in that. The particular screen on screen shows you in terms of our revenue distribution, where we're looking in terms of our budget. And members, you will note that, as I explained earlier, that our HR budget is high. And one of the main cost contributors to that high budget is a result of us having to have an equitable in terms of local and expatriate, in terms of a good distribution of members from the community working, or employees from the community working in Mauritius. That does put a bit of a strain on our budget, and the ratio is realizable a little bit higher than it should be. Currently, as we speak, as of Lusaka, we have frozen the growth, and we're just doing replacement in terms of those who leave. That's what we replace. And in the meantime, we are we're growing the revenues. So it is anticipated that that ratio will come back to normal in about a year's time. But it's anticipation that as we grow, that ratio will normalize. Though we still have some positions that will have to be filled because in terms of our service requirement. So that number will probably grow, but not as much. And we do look forward that we'll bring it into line with the standard ratios. Again, there's the detail in terms of where we're looking to spend the money, but the key thing was one I've stressed about. So really, that's what the budget looks like, and I think these budgets have actually been distributed already. So we go back to the statement of comprehensive income. I'm not sure whether members need me to go through these numbers, but the numbers will be shared, or have been shared, because we're in 2014, and so the budget had been shared earlier. So some of the highlights. In terms of, we are anticipating to close the year at about 101K in terms of positive. We're looking at trade receivables, which we're expecting to drop. In terms of our improvement in our collection, we've actually improved our collection as we stressed and introduced strict payment systems, and we also have an extra resource for collection. The graph below also shows what our liquidity ratio is, which is 1.2. I know members have been asking whether we are in a sustainable position, but I think that ratio shows that we really are. Corporation costs, registration service is really the highest in terms of the cost. As one of the members represented earlier, it is the core side of our business. Okay, and with that, I end the budget presentation. Okay, I will now ask the Director of Finance to come and do his execution in terms as per the budget I've just talked about, which is item 5.4. Patrice? We will take questions after this presentation because they both work together. While Patrice prepares, if anybody has any questions on what we've just presented, we can use that time.
Good afternoon. Here to present our 2014 budget execution, basically what has happened to our budget actual during the first quarter of 2014. It's actually an extension of the presentation that was done earlier on by the rest of the team with regards to the operation update. 2014 started normally in a typical start, rather slow, and because activities start kicking off first, second month or third month of the year. For us within the finance unit, our focus started early in January, but with the preparation of the statutory audit and for the financial year 2013. At the same time, we had started the billing exercise in December. So basically, the first month or weeks of the year was actually completing that exercise with communication with members, getting invoices out and what have you. Of course, this year, given the experience we've had in the past few years, this year we've set an objective to try and at least achieve a much better collection rate for our fee collections. This is basically what the numbers look like for revenue in the first quarter. You will notice that I've split it into two sections, the existing members, which is basically fee renewals, and the other part is actually new members. As far as the existing members are concerned, we've achieved 91% because all our members are billed the first month of the year. There is a slight difference between what has been billed versus what was budgeted for the existing members. That is because if members haven't paid for the previous year's fees, we do not actually invoice them until those fees are paid. This is why you will find a difference between the actual Q1 and the budgeted Q1. We do expect to have to achieve all our revenue which has been set for the year, and the new member will start picking up in the second and third quarter. This is basically summarizes the data on the first on the table earlier, which I just mentioned. The lower fee renewal from existing members attributed to existing members who have not yet paid or settled their 2013 fees. Once they pay those, we'll invoice them for the 2014 membership year. Now this page here gives us a rough idea, well actually not rough idea, it actually gives us the picture with regards to fee collection. You will notice that the fee collection for 2014 has greatly improved compared to the previous years, and this can be attributed to a couple of factors. One of them was the levying of late payment penalties. This seems to have really worked. In addition to that, I think it was mentioned earlier or yesterday, I can't remember when, that within the finance unit, there was a billing unit that was created mid of last year, given the fact that the number of members have increased. So a lot of tasks related to membership has obviously increased. There was a need to put together a team that will solely be responsible and looking after matters relating to billing. Another factor which may have contributed to the improved fee collection was the fact that invoices for the 2014 were sent using 3 different ways. We sent invoices via email, we had also posted them on MyAfriNIC, and in addition to that, we had also sent them via courier. That's a bit of an expensive exercise, but unfortunately, in the past years, we identified members not receiving invoices as being one of the reasons for the delay in payment. So it seems to have worked. I'm not too sure whether it's something that we're going to carry on doing, but at least it is proven that it has greatly improved our fee collection. This is basically the operating cost for the first quarter. You will notice there as well, not much, the slow activity during the first quarter is reflected in the cost as well. It's the normal HR cost, which is recurrent monthly and what have you, but the other, everything which is on this administrative section of operating cost is the routine telephone, comms, and operative administrative expenses, stationery, and what have you. And again, that's within the budget, and as we have achieved 23% of the total annual budget. The next section, you will find the distribution expenses, which is directly related to all the other meetings and all that. So our first meeting being held in May, June, so that automatically falls into the second quarter. So the expenses within this part of operating costs will start kicking in the second quarter. Yeah. So this is basically summarizes what we've seen from the different tables. The Q1 admin costs reached 23% of the annual budget, while distribution is 12%. Again, I'd already given you the explanation for that. Overall, our operating cost is within the annual budget to 21%. And based on that, and looking at all the activities which is taking place, no significant deviation from the original budget is anticipated for the coming year. One issue which has been on our list and which has been quite a pain the past couple of years has been the incidence of bad debts. This has impacted both the bottom line and obviously future revenue profiles. So once we write off unpaid debts, that means the membership is cancelled, so we lose future revenue going forward. So we had to try and do something about that. So what we're doing since last year, we've started to pay a lot more closer attention to the, whenever members are having trouble in settling their fees, we communicate a lot with them, and we try and find out what the problems are, and it seems to be working. Again, we're using all the effort from the billing unit and the member services to reach out and find out what the real reason. In some cases, there are genuine reasons that the business has just gone out, you know, it's just collapsed, or it's a takeover, it's a genuine case of members closing, or they're finding it cheaper to get their resources elsewhere, or something along those lines. So, this year we have a couple of challenges that we've got on our side. First, one of them is to keep operating costs within the budgeted limits, and that is one of the ways that we can actually maintain our forecasted bottom line. Second one is to really maintain the collection rate, which will improve on our cash flow. So which means the next one will also be affected by reducing the number of reclaim and non-payment. And at the same time, one of the ongoing issues that we've had in the past has been the use of MyAfriNIC by members. A lot of issues that we've had, especially non-payments, is the outdated contact information which members are supposed to update in their account in MyAfriNIC. Those are not done. Therefore, communication, invoices, emails get sent to the wrong people. So this is a huge issue that we keep on encouraging all the members to ensure that all contacts which are maintained in the database are actually updated on a regular basis. This is the forecasted balance sheet. I think the chair just presented that earlier on. We do expect an improved balance sheet for the coming 12 months, especially increase in our cash holding, and the liquidity ratio is set to improve, and at the same time we're looking at reducing the closing outstanding unpaid debtors for the year. Right, I think that's about it. If there's any question?
Okay, thank you, Patrice. Members, does anybody have any questions, please? If you have any questions, can you please go to the mic? Any comments, questions, suggestions?
Yeah.
Proceed, Alan.
Hi, I'm not sure if this is the right time to ask this question, so if it's not, please stop me. It's about the fee structure for members. May I ask?
Yes, you may.
Okay, thank you. So at the moment, there's a very large difference in the fees payable by end users versus the fees payable by LIR members who have the same address space. So just for example, a medium-sized university with a /16, if they were classified as an LIR, I believe they'd have to pay something like nearly $13,000 in annual membership, whereas if they were classified as an end user, they would have to pay $600 in annual membership. That's not a small difference. That's a factor of 20. And it spills over into the policy area. Sometimes we have people in policy discussions arguing about whether some policy should be, should cause an organization to be considered as an end user versus an LIR. And we see that organizations like universities, which provide internet access or IP addresses to other bodies which are kind of loosely associated with the university, like, you know, maybe they give IP addresses to students in their housing estate associated with the university, or maybe they have research institutes or non-profits which are associated with the university. So we often get arguments in the policy area about whether or not that would make the university an LIR as opposed to an end user. I would like to see a much smaller difference in fees, because, you know, if the fees payable by LIRs versus fees payable by end users were much more similar, then there wouldn't be such a big incentive for them to try to warp things to be qualified as an end user when other people might think they shouldn't really be so qualified. So I ask the board to consider the fee discrepancy and possibly address it by making changes in the future.
Thank you, Alan, for that, if I may answer that question. It is something that we have been discussing within the board for the past, I would say, 2 years. The first action happened last year, where we have indeed reviewed the end user fee to increase it, but of course not significantly enough to get them close to LAR fee. The reasoning behind the difference in fee is the operational relationship we have with end user compared to LAR. End user, generally, they are organization. They come and get their assignment. I'm not talking about university, because their cases may be separate and different. The majority of our end users are corporate organizations, small organizations that get their own IP address. They come once, they get the assignment. So the fee, it is an assignment fee, not in fact, that is the assignment fee is what we look at. The other fee is the membership fee, which is the renewal of their status. They do not interact as much with our WHOIS, so in terms of resource, they don't, because they don't do assignments, they don't delete objects, they don't almost never use MyAfrinic, they don't, in fact, use many of our service, because they cannot even do assignment. They have only one assignment made by Afrinic, which is locked. So the amount of resources that we dedicate to LAR is much, much more higher than what we dedicate to end users. So that is the rationale between the difference in pricing. Now, we can increase end user fee or do the thing, but I don't think it is completely fair on small organizations that are receiving those IP addresses for their own infrastructure to be bearing the cost of biggest company.
Okay, yeah, Lou?
Hi, I actually have just quite a practical question in the member fee page, and I've discussed it with your financial director as well. Basically, it's not really clear in your website about the IPv4 fee category and structure, according to my understanding, basically. I'm just read out in your web page. So it says allocation size from /22 to /21. It's one category, and the next category will be bigger or equal to /20 to /19. And the next one is bigger or equal to /18 to /17, and so on. So there's a gap really in between. What if your allocation, what amount of IP address you have is bigger than /21, but smaller than /20? Is that fitting in the upper category or the lower ones? It was not really clear.
It's the lower, in fact. That's why the next category, I think, if I'm recollecting well, the next category starts by bigger than, equal or bigger than. That means because you can have cases where a member can have a fixed prefix with a smaller one, like a /20 plus a /23, for instance.
Exactly, that's what I mean, yeah.
So he is lower than the next category. So that's the way it is calculated.
According to your financial officer, he said it's actually put in the higher category. But anyway, I think the best idea to solve this is just simply put exact IP number there instead of a /22 or /21. I think that's a better idea, so it's perfectly clear. Just, yeah.
Yes, that is one of what we were trying to solve by using a /32 representation instead of slash, because you don't have a boundary, fixed boundary. Even if you put /22, you still have a gap between if it is more than the /24, because the minimum allocation is /24.
Yeah, but if you put exact same amount to the category number, it's be more clear to most people, I think.
We can discuss this further.
Yeah, thanks.
Okay, I'm Sheun from Nigeria, and I work for Federal University Oyekiti. I'd like to comment on what Alan said, and my comment is that I have no problem with increasing membership fee. I have a problem when the justification for increasing membership fee is based on institution. There is a clear policy process, existing policy that defines who qualifies to be an end user. Okay, so I don't think we should, however, I know there are some institutions that are actually operating as LIR. So I don't think we should say because some institutions are end users and so we should increase the price. No. If you want to increase the price, but don't use institutions as the excuse for that. Institutions are getting their resource because they qualify for it under the LRR and end user processes. Thank you. And if something needs to be corrected, somebody should propose a policy and fix that.
Sure. Can I get you back just to, again, just get to 2 points at what you want us to respond to that? Because I didn't get it.
No, it's not a question, it's a comment. And I hope maybe Alan is back on the queue. Maybe he's going to address it.
Thank you. Sorry. Proceed, please, Boubacar.
Oui, merci. Je serai très court parce qu'en fait...
I will be brief. I am going to talk. It is a comment. It's a comment on what Alan said. We have to be careful, as Sean said. If institutions are end users, because they are qualified to be end users. The example that Alan has given is not an example. The students are in the universities, and it is the nature of the university to have a research for laboratory research institutions within universities for the work of the academic community. We cannot say that a society will be LIR because it has got a department for research and development in that university.
Again, Aaron and Ripe, and I'm open to correction on this, and I don't have figures, and I'll say so openly. It's my understanding that these legacy members can actually sign an agreement, become members in their own right with full voting rights, etc., and then be subject, I believe in Ripe, it's to different fees, legacy fees, but I'm not 100% sure on that. And in Aaron, they can also become members where they are contributing and gain more rights. Does AFRINIC have any such plans to make that an option for legacy members? considering there are over 300 of them and they're carrying quite a vast amount of space, and that may be a way to potentially generate more funds for the organization if the legacy members so choose. I'm not suggesting in any way that we mandate our legacy members to do this. I'm simply asking if there is a way for them to potentially do this and opt to do this to potentially generate further funds should they wish to contribute.
Let me clarify a little bit what he was saying about the right NCC and legacy space. Anybody can become a member whether you have legacy space or not, and you pay the flat fee as anybody else, so it's regardless of whether you are a legacy holder or not. And you can decide to become a special membership, which is not yet implemented, but that's more the cost recovery. It's lower fee than, so it's not really generating extra income because they're legacy.
Owen DeLong, Aaron AC. In the Aaron region, we have the option for legacy resource holders to sign the Legacy Resource Services Agreement, and it has been very rarely used by very few of our legacy organizations. It does come with the obligation to pay Aaron fees. Most legacy holders are treated as end users, so the fee is $100 per year per resource. It does not give you membership at that price, but if you are a paying resource holder, you then gain the option to pay $500 per year to gain membership, or if you are an LIR, you get membership automatically in your much larger fee that you pay annually. As I said, very few of the legacy holders have taken advantage of this, and the few that have primarily done so with their eyes on performing an 8.3 transfer to sell the part of or all of their address space.
On the legacy side, I would just add that we have an internal project into thoroughly analyzing what is the situation with legacy, and beyond even their membership, clearly defining which kind of service we can provide to legacy member right now, because there is no formal framework for them to receive service from Afrinic. So that is on the way. The second thing that I can say is that we have in our new bylaw a provision for associate membership. One avenue is to look at how that associate membership can be used into that, but of course this is a voluntary thing, and there is no effective guarantee that doing that will generate a revenue as we can think.
Hi, Alan Barrett. Back onto that end user thing. I fear I might have been misunderstood. I did not mean to imply that just because a university has a research arm that it's not an end user. My real point is that the huge difference in fees provides an incentive for cheating. There are organizations where, maybe most of them isn't like an end user, but they have a small part which is doing something different. And if you look at the definition of an LIR, occasionally it can happen that an organization would fit the definition of an LIR and should be using SWIP or RWHOIS or whatever to register their sub-allocations with Afrinic, but they're not. And the reason they're not is because they don't want to pay the extra fees, which would be accompanied by that.
If I can just add to Alan's comment there, and I confess I was one of the ones who fought very hard for universities to be classified as end users. The situation that we found was that some of the universities did have a small portion of which were operating under the LIRs. The majority, however, were acting as end users. And the way we dealt with this was to commit to Afrinic that the university's legacy resources, because the universities in question when this debate really was raging on the list, were also legacy holders. The legacy space would, first of all, obviously not be counted towards allocation fee size because it still remains legacy space. and secondly would be used for any portions where the university was actually acting as an LIR, and a commitment was given to AFRENIC that the space that was allocated that was non-legacy would be used purely as end-user space. This was accepted by AFRENIC in the case of the University of the Northwest, University of Pretoria, University of the Free State, University of Cape Town, and I believe the University of the Witwatersrand, all of whom are legacy resource holders. So as such, I do acknowledge that some of these institutions are acting in part as LIRs, and as such there is potentially a problem. Like I said, it's purely the fact that some of those institutions, well, all of the ones I named, were holding legacy resources that allowed them to do this. Whether or not that is completely fair going forward or not is another story, but that is the current status quo as of the time when that debate was really raging last year.
On this, I think there has been, a long debate on the RPD list to clarify what end user and LAR is, and there have been some good proposals there, but really the community has not reacted to that to come forward with a clear proposal to clarify or update any of the policies. So I think if it is an issue that needs to be clarified in terms of defining end users versus LAR in the current policy, it will be something good to come forward with. Thank you.
Do we have any more comments on that? Before we do, I just wanted also to note to the community that at times when we start talking about fees, it's a double-edged sword. A few minutes ago, we were being, as board, tasked to make sure that we make that the company actually makes sure that it earns money and gets into a positive. Yet right now, all academic institutions are enjoying a 50% discount on fees, which if the current trend continues, community needs to be aware that we might need to review that as well, because it is key. So there's a balance, and it's a very thin balance, and we need to appreciate that most of the time.
Sorry, I've just got one last question. On the issue of policy, particularly in what I raised earlier, potentially about legacy members and giving them an option to join and pay fees, I'd just like to understand how we go about addressing this in terms of policy, considering the fact that fees are obviously the prerogative of the board. That's fairly clearly stated in the bylaws and in precedent, whereas a policy like that would potentially introduce fees on legacy members. So if the board could provide some guidance so that we could form such a policy that would not impact on that separation of duties.
Owen DeLong, Aaron AC. This is actually a question that's come up quite often in the Aaron region, and the approach that is generally used is to propose a policy which takes care of the policy aspects of giving the users whatever status and making them members or whatnot, and setting the policies by which they get additional resources, et cetera. And then leaving it to the board to decide whether that's subject to any fees, and if so, what fees they are going to set. The general advice we get from the Aaron board as members of the AC is write good policy for the policy parts and let the board take care of the rest.
That was what I wanted to answer. We cannot tell you what we are going to do as board without we know the policy and we have done all the analysis that is needed to be done. So I think we need to keep that separation clear at this point. Thanks.
Okay, members, with that, please allow me to move on to item number 6 on our agenda. which is the proposals of bylaws and review. We've got 6.1, which is bylaws revision proposed by the legal counsel. As the legal counsel gets on to prepared, okay.
This time is good evening. I'm not so used to working this late because of my age. So I'll try to just introduce, I try to just go very quickly through those proposed changes. In fact, the whole idea stems from discussions we have had at board level. And the idea behind the discussions were the issues which were raised in several quarters about the status of the bylaws, whether some people felt there were contradictions, whether felt there were inconsistencies, whether felt it did not match with the Act. So this examination of the bylaws is an ongoing process. One, because of the reason I've just evoked, and secondly, because of the very specific nature of AFRINIC's operation. So all the time, depending on what goes on in the field, what goes on with members, what happens, we try to adapt. But it's always afterwards that we come and adapt. So this is going to be a continuous process. And because of this, I feel I have a long time to work for AFRINIC. It won't end. It goes on all the time. So this is the raw document which I have produced for the board. And the whole idea is for the community to have a look at it, to reflect during the statutory comment period so that we can move ahead. We are expecting also that members would come forward with other views so that whatever we decide to change now, we can do it at one go. Now, there are three types of amendments that we have brought. One is a new editorial, especially section 1 interpretation. Most of the things there, I don't think you would be able to see it properly because it was a raw document. And the first amendments regarding the interpretation section, we have tried to write it so that reading is lighter. But one thing I would draw your attention to, and you'll find it later when you go through it, the definition of associate member has been enlarged to include precisely those legacy resource holders. So we put in there, as if opening the door, if they so wish to come in, they could come here. The other thing about the section 1 is that all through the document you would see we use the word constitution. This word has been removed wherever it appears, and we have adopted bylaws with the same definition. If I might rush through again. Yes, then we have tried to define the observer person who comes to our meeting. So in the definition section, we attempt to put in a definition so that the members could have a look and suggest whether they are satisfied with it or we need to refine. I think we do, but just it is the first raw document we are putting for discussion to you. Now, if we move down, then we have got, apart from those editorial, we have certain amendments which introduce new sections. If I could go very quickly, we have a new section 7.2 subsection 3, where we in fact bring in officially what we have done today, that we have got members on one side, observers on the other, so that it is in the bylaws. Now, everybody can use it as a guideline, as a yardstick for future meetings. We have a new section 7.52, which in fact gives some, as we say in French, épaisseur, some real existence to observer. Who are observers and who are not, and what can some observers do and others cannot. For example, we have put in a qualification for them if ever the chair of a meeting decides to give them the opportunity to participate, the observer can then participate by bringing comments, by asking questions. Otherwise, they would have a very strict observer role where they come and observe. Now, there is a further definition we have given, 7.5 subsection 6, is the same thing which comes from the first paragraph, 1.1 interpretation section. I would also like to draw your attention to 12.7. Yes. Yeah, yes, okay. 12.7. Where we again address the observer capacity in greater detail. Then we come where we have got two deletions, 12.11, where we delete 12.11 subsection 12 regarding the postal voting. So we thought that this is a remnant of the past, as it were. We are moving to e-voting, so carrying on this postal vote, which has never been used. So we suggest that this be deleted completely from the bylaws. As well as subsection section 13.8, which following discussions at board level we found is no longer applicable to our context, 13.8. But before that, we have tried to rewrite new subsection 13.7, which relates to the election of region independent director. It's only a rewriting. There's nothing which has changed in the substance of the subsection. And finally, we'll invite your attention to section 17.2, which relates to the chief executive officer. We suggest a numerical sort of majority when deciding to terminate the employment of the CEO. We are suggesting 6 directors out of 8 would be sufficient enough to do that. And finally, the last amendment is subsection 17.3, which is a rewriting of an earlier section where there was a prohibition for a national of a country where the seat of the company is to be eligible for CEO. We just have rewritten that. So with these words, I will say in Parliament, we commend this to you, good people, to have a look and bring in your comments so that we could refine whatever we have as bylaws. Would suggest other things as well. Since we are doing it now, maybe bring other amendments. We'll do it at one go. Thank you very much. I hope I'm in time, Chair.
Thank you, Ashok. If we don't have any comments, I would like to move. Fiona, you?
Yes, I'm just wondering, with the value we give our bylaws, and being that Ashok has not been able to circulate the document.
Fiona, before you proceed, this was just a heads up.
Okay.
The bylaws are going to go through the process. They will be discussed. They will go to the community, and then there will be. Well, thank you. Anybody else with a comment, please? Okay, thank you, Ashok. That brings us to item 6.2, which is a special resolution proposed by Andrew.
Board, at this point, I was looking around at the members present here, and also, since I proposed that resolution, I've become aware of other things in the Companies Act which actually cover pretty much what's proposed in that resolution, but with less stringent criteria. So the resolution as it stands proposes for a special resolution to introduce a vote of no confidence, whereas the Mauritius Company Act actually allows that to be done by ordinary resolution. Now, I need to state that I simply proposed this resolution because I believe that the board, and I include myself now that I have been elected, and I included myself when I proposed that, should be accountable to the community. Now, considering what I have read in the Companies Act since I proposed that, and I apologize to the community for not having realized this earlier, and also considering the fact that this is a fairly drastic change, and we're currently, at my count, only sitting with 16 members on the floor, I would like to withdraw that resolution, and I would also like to state that at a future date, when we have a lot more members present, I'd like to reserve the right to bring that resolution back to the floor, however, in line with what the Companies Act actually says. Thanks.
Okay, I need somebody to second Andrew's.
I think I can second that one.
Thank you. See, there's a reason you sat near the mic. Thank you very much. Hey, members, we did not have anything that went into A or B at the beginning of the meeting, so I would like to pass on to Adiel for a small A or B, and then we'll proceed.
Thank you very much, Chair, and thank you very much for the proceeding. I just want to make a small recognition before we close the AGMM. I think that maybe we close the AGMM. The AGMM is closed? This is not part of the AGMM.
Okay, thank you. So, procedure. So, the AGMM is closed. Members, thank you very much. We will see you again in the next AGMM. Thank you.